Are you concerned about how you'll take care of your health insurance from the time between employment or COBRA ends until Medicare kicks in, if you're considering early retirement or if you're already in early retirement? In this video, I'm going to share with you what I learned from managing this and experiencing this myself for well over a decade. Hi, I'm Camille Gaines. Here and on my website, retirecertain.com, I write about and talk about my investing adventure since I bought my very first mutual fund in my early 20s, which, as you can see by looking at me, was a really long time ago, as well as creating multiple income streams over the past 15 plus years after an unplanned early retirement. In this video, I want to share with you what I learned from that time frame when COBRA ended. I'm still not eligible for Medicare, fingers crossed, a little bit longer, but my husband has transitioned to Medicare. So I want to share with you what we did. And I think I did just about everything during this time frame. So I think with my investing as well as this insurance situation, I just share what I've learned, and I feel like I've done a lot of different things, and some things work and some things don't work. Now, if you like this type of information, make sure you subscribe to my channel. Click that little thumbs up somewhere below the video if you like this type of information. So yeah, the very first tip I want to, well, first I want to say, before I even get into the tips, I just want to say really briefly, and then I'll jump into the tips. Health insurance is so scary. It's like investing. It's like we feel like, oh my gosh, if I don't do it, I'm not going to have enough money to live. It's scary. We don't know how. We don't know what's on the horizon. And very much the same way, health insurance is the same. We don't know what's on the horizon, and it is terrifying to think about not having the money we need or the insurance coverage we need to take care of us when we or a family member becomes ill. It's terrifying. And I know for me, that led me to overspend on health insurance for a long time, many years, until I finally said, wait a minute. I'm just going to look at this and see what have the results been with me spending this money. What benefits have I gotten from it? How much have they paid, and how much have I really used this? So I'm going to get right into my tips. I've got them organized. The first tip is to do exactly that and analyze, evaluate your own situation, okay? Ask the following questions. Do I go to the doctor very often? For me, for example, I hardly ever go to the doctor. I tend to go to alternative healthcare practitioners and practice alternative medicine, things that help me stay well, so I don't go to the doctor very much. So for me, it was sort of crazy. You may love your doctor network. Everybody's different. Most people really do love that. If that's important to you, then make note of that, all right? So do you go to the doctor often? Do you take medicines? Do you go to physical therapy or any type of therapy like that? Is there some sort of mental health coverage that you would like to have for you or another family member? Do you want to be able to, above all, be able to go to certain doctors that you really, really like now? Are those doctors in a certain network? These are the kinds of questions that you want to ask, and then from there you can decide what kind of coverage you need. Okay, so the first tip I want to give you is that there are these network groups to be on the lookout for. I'm not saying that they're bad, but I'm just saying make sure that you get what you think you're going to get. And let me just throw out what happened to me, and that's how I learn, and what I share here is based on what happened to me. So I saw that there were these network groups. In fact, they were recommended in a financial online group that I'm in, and they're quite smart with financial tips and that type of thing, because that's what they write about and what they do. And they all found that this was, or a number of them found their insurance through these network groups. For example, there was a Christian network group, and that's the one I looked into. And I called my doctor to say, confirm that they were in fact in the group. And they said that they were, but they were going to need to leave the group because the group was not able to pay them enough. So if you are looking at some smaller groups like that, and the way this works is just they're able to come together as a group with a commonality and then get insurance coverage through that group. And you've probably heard of some of them, or if you start digging around for options after COBRA, before Medicare, you'll probably run into this. I'm not saying they're bad. I'm just saying be careful with it and check it out really good. All right. The next tip is related to that exact story. Call your doctor and make sure they're in the network. We tend to check things online now, and we can see that a certain doctor or physician practice is inside of the network, but call the doctor and make sure they're still in the network, and also find out if they have any plans to leave. I mean, just they may not readily offer that information, but if you sort of talk to the benefits, have a little chat with the benefits person, they may offer that information, just like the woman did at my primary care physician, and I was able to find that out. The next tip is to analyze if it's worth having a prescription plan. And what I did, I really compared, because I don't take a lot of medicine, but I do take one medicine for headaches called Frova, and I wanted to be able to get it. It's super expensive. It's crazy expensive. But what I did is I went ahead and got insurance, and this was, honestly, I changed just about every year or every 2 or 3 years, certainly during this time frame. So during this particular time, I wanted to choose an insurance that didn't have a coverage for prescription, because we don't take many prescriptions at all, like I said, just this one. So what I did is I bought the prescription from Canada. So I just got it filled that way. It was much cheaper. Now there are some other options in the United States. GoodRx.com, I know, is one of them. And I live in Texas, in the Austin area, and HEB is my pharmacist. And so I call them and I just tell them I'm paying out of pocket. How can I get this cheaper? It's unbelievable. They do have to run it through, but there are usually several different options for me to be able to get the medicine at a different price. Not only that, you can ask, is there a generic I can take for this? And you probably already know that tip. Figure out how you can get your medicine maybe in a different way than having it as part of your insurance coverage. Just look and see how much will I spend every month on the medicine versus if I have this on my insurance coverage, and will it be worth it? How many medicines do I take, and will I take many more? So analyze that and see what the options are. The next tip is to let your doctor know if you're paying out of pocket. There's some sort of regulation around this, like they can't change what they charge supposedly by law, but I know that it's made a difference in the past. Maybe it's because they just don't spend as much time with me, but I've gotten what I've needed, and I've said, look, I'm paying out of pocket for this visit, and so please work with me on this, all right? And having said that, again, I want to say I've done everything, and I'll give you more detail about this. I'm just sort of giving you the overview. But I've done everything from PPOs to now I've got sort of what's called, I believe my insurance person said, a temporary policy, but it's not really temporary and it can't be canceled. So I'll tell you all that. But these are just all the different tips that I figured out, things that I analyzed before I made a decision to go into a PPO versus an HMO. And now there's another one, I can't think of the acronym for it, versus the policy that I have now. The next tip that relates to all of this, it sounds like it doesn't, but it really is, and that is to figure out if an HSA makes sense for you. Because if you need an HSA or have an HSA, you're going to have to buy a much higher, let me rephrase that. I was going to have to buy a much more expensive insurance policy. You have to buy a qualifying high deductible insurance policy. So it seems a little unfair to me. Like, in order to take advantage of this tax benefit, I was going to have to pay so much more in insurance. So I just looked at my highest marginal tax rate and said, okay, well, what would this save me in taxes? And would it make sense for me to have the HSA and pay for this really high insurance policy that I'm probably not going to use since I don't go to the doctor very much? Or would it be better for me just to not have the HSA and get as cheap a policy as I possibly can? So analyze this and see if it makes sense for you. In hindsight, I think HSAs make so much sense. One reason, and this ties into, I guess, everything I'm talking about, is what do you do? And it's just sort of like with my investing. Everything is really about you. There aren't all these rules that work for everybody, all these rules and formulas. You just have to say, what's my situation? So with you, do you do alternative wellness? For example, I go to the chiropractor, I purchase supplements that my chiropractor or sometimes my doctor, I tend to go to my DO, who often offers alternative suggestions for me that are not going to be covered under my insurance at all or tax deductible in any way, yet they would qualify, from what I understand from my CPA, for an expense under my HSA plan. So figure out what you spend money on that relates to your wellness, right? That's what we forget. This is all about being well and feeling good. What do you spend money on, and how would that work as part of your overall financial picture from a tax perspective, as well as that monthly expense that you're going to have, because this is a very, very large monthly expense that only is increasing with time. The next tip is to consider if this would at all make sense for you to have an entity or a small business. You may already do some sort of consulting or be planning on doing some sort of consulting or some kind of side gig when you retire. And you know, I love that whole idea of creating alternative income streams. If you're doing something like this, it probably makes sense to set up a company or be structured as a company for tax benefits, and as such you can decide if you want to be an S Corp or a C Corp. Both of those have different ways that they handle your medical insurance. This can be a big advantage to you, but we also just as individuals now have benefits that are related to insurance. So you really need to talk with a CPA or just really, really watch some videos or do some reading on this. I think it's a good idea to talk to a CPA that's specialized in this, perhaps a financial planner. You could hire someone just on an hourly basis and brainstorm and figure out what would be the best way for you to go about this. Having said that, we've done just about everything around this as well, because we do have a small business and we've had a C Corp and we have an S Corp, and I also now, like I said, have my insurance just as an individual. The S Corp and being an individual are not real different, but I'm not going to go into that. But check it out, see if it makes sense for you. I already mentioned, and this is the next tip, I guess, is that now I have just a temporary policy. I'm saying it's a temporary policy. It's not like it ends. I believe that's the way that my insurance broker explained it to me. And it was the lowest cost plan that I could get for decent coverage. Having said that, I just don't care that much about having a lot of coverage. The next tip is to plan ahead. Think about what procedures you'll probably want to get done maybe next year. Time goes so quickly, and just keep a list. Well, I want to get this done next year or that done next year, and see what doctors you want to go to and see what network they're in, and that will sort of gear you to the type of policy that you're going to want to get. The next tip is simply to stay healthy, eat healthy, exercise, do the things that help you be healthy so you don't have to spend a lot of money on healthcare. The next tip is the biggest tip of all, and this was to use a fantastic insurance broker. My CPA recommended someone for an insurance broker for me, and she was fantastic. She spent so much time with me. She even took my kids through getting their policies online in the marketplace. The brokers are paid by the insurance companies, so it didn't cost me anything. She was worth her weight in gold. I would have paid her. She was fantastic, and I highly recommend finding someone, preferably someone that's local, that really, really cares about you, not just pushing products. And that made all the difference for me. I highly, highly recommend that. I live in Texas, and as I understand it, it's state regulated. And again, this person was recommended by my CPA. So ask your CPA if they know of a good insurance broker. Ask your doctor, or if you go to physical therapy, your physical therapist, who they know of in the industry that might be a really good broker for you. I know this is a big decision. That's what I've learned from getting my own insurance over these years. And I hope you found this information helpful, and you'll find something that works really well for you. Above all, remember, retire certain.